We are now going to discuss bank reconciliation. As we know, cash is the most tempting object on earth, and we can say that that is the number one root of all evil. So to safeguard our cash in bank and to prevent malversation, which we call kiting, we have to prepare bank reconciliation every end of the month. That is one bank reconciliation for every one bank account, which means that if you have 3 bank accounts, you have to prepare 3 bank reconciliation. First is, we have different kinds of bank account. The most popular one is savings account. We have the current account or checking account, and we have the time deposit. How do we conduct transaction with the bank with this kind of account? For savings account, we have this bank book or we have the bank book, which means that every time that we conduct business with a bank, we bring along the bank book. Say, example, we have to make a deposit. We're going to prepare deposit slip, and together with the bank book, we're going to give it to the bank teller. And the bank teller will record the transaction in our bank book or passbook. Same with if we're going to make a withdrawal. We're going to prepare withdrawal slip. Then, together with the bank book, we're going to give it to the teller, and the teller will record the transaction in our bank book. So in our passbook or bank book, the transactions were recorded. That is why, at a glance, if we want to know the balance of our cash in bank, we just have to see the bank book or passbook. For time deposit, we made a contract with the bank that we're going to entrust the cash, the deposit with them for at least, say, a period of 1 month, 2 months, or 3 months, which means that we cannot withdraw it within that particular period. And the other one is checking account or current account. For current account and checking account, every time that we have to make a deposit, we're just going to prepare deposit slip and give it to the bank teller. And every time that we have to make a withdrawal, we're going to prepare a check. So, for checking account, we do not have a passbook or we do not have our own record in recording the transactions. Our record is our ledger. And the bank, every end of the month, they're going to furnish us the bank statement, our bank statement with them, which means this bank statement is the bank's record of our transaction with them. Okay, and with this bank statement or with this bank account or this particular current account, this is what we're going to have our bank reconciliation. Okay, so let us have an example here. Say this is our ledger, cash in bank, BDO. So what are the transactions that we usually record in this T account or in this ledger? On the debit side, every time that we have a deposit, we're going to have an entry. Remember, one tool of safeguarding our cash is through an impress system. And an impress system means that every cash that we receive should be deposited in a bank, and every transaction or every withdrawal that we have to make should be made through a check. Okay, so what are the transactions that were usually debited in our ledger? Say we have a week's sale or a day's sale, our entry, debit cash in bank, and credit sales. So example, our 1 day sale is 100,000. So debit, cash in bank, BDO 100,000 and credit sales 100,000. We have collection from our customer. We have debit cash in bank 500,000 and credit accounts receivable. And for a week's sale, we have 300,000, debit cash in bank, and credit sales, 300,000. Again, collection, notes receivable was collected from our customers, so debit cash in bank of 200,000 and credit notes receivable. A loan, proceeds of bank loan from we apply for a loan from another bank, and the proceeds is a 1 million. So debit cash in bank 1 million and credit notes payable. So every time that we have a deposit, we're going to post it on the debit side. Say we have another 150,000 and we have 200,000. Okay, what about the transactions that were posted on the credit side? Every time that we issued a check, we're going to, that means that is a withdrawal. Say we purchase cash purchases, debit purchases, and credit cash in bank, 200,000. Then payment for our suppliers, debit, accounts payable, and credit cash in bank, 150,000. Payment for salaries, debit salaries expense, and credit cash in bank, 50,000. Payment for utilities expense, debit utilities expense, and credit cash in bank, 25,000. Then other expenses, payment of other expenses, that is 10,000. And say another cash purchases, debit purchases, 100,000, and credit cash in bank. And another one here, 15,000. Okay. So this is the transactions that were usually posted on cash in bank ledger. In the bank, say this is the subsidiary ledger of our account in BDO. Our company's name is ABC Company. Okay. The bank, every time they receive the cash that we have deposited, their entry is debit cash and credit ABC Capital. So when this amount, 100,000, were received by the bank, when we deposit it, their entry is debit cash in bank and credit ABC Company, 100,000. Also this 500,000, their entry, debit cash and credit ABC Company, that is 500,000. Up to 200,000. And every time that we have a withdrawal, every time that our check issued were presented to them and they paid it, their entry is debit ABC Company and credit cash. So when this check were presented to them and they pay it, their entry is debit ABC Company and credit cash. So that is up to 15,000. Okay. So for our ledger, let us get the balance. So this is 2,450,000. 550,000. So minus 2,450,000. So we have 1,900,000 debit because that is an asset. Okay. So our ledger balance is 1,900,000. So the bank balance should also be 1,900,000. It should be the same because we only have we're just concerned with our deposit with the bank. We're talking about the cash that we have deposited to the bank. So for our ledger, if it is 1,900,000, it should be 1,900,000 also on the bank's record. Take note that in our books, in our record, it is an asset, but in the bank's record, it is a liability because that is their liability to us. Okay, going back with this 1,900,000, again, as I have said, this should be the same because we're just talking about the same amount, the cash that we have deposited to the bank. But almost always, these two accounts are not balanced. That is why we have to make bank reconciliation because they should be balanced. Okay, we have three kinds of bank reconciliation. We have the book-to-bank method, we have the bank-to-book method, and the other one is adjusted balance method. If the problem is silent about what method you're going to use, it is always adjusted balance method. And anyways, the book-to-bank method and bank-to-book method are used usually in auditing problems. Okay, so what makes these differences? So we have our banks reconciling item. Or books. Let's have books first. Books reconciling item. Okay, number one is credit memo. Okay, if we said credit memo, by the way, when the bank furnish us the bank statement at the end of the month, it usually includes this debit memo and credit memo, which means debit memo and credit memos are transactions made by the bank, which the book was not able to record. Okay, so credit memo, what is this credit memo? If we said credit memo, it means that the bank have an entry, debit cash and credit ABC company. Credit memo, which means the bank credited our account. And if the bank credited our account, it means they added cash in our account with them. They have an entry, debit cash and credit ABC company. And we do not have that entry. They have a plus in the record, but we do not have a cash in our record. So what are the examples of this? We have proceeds of bank loan. Another one is note collected by the bank. Okay, proceeds of bank loan. Example, we apply for a loan in BDO and we have an account with BDO. So, the loan were approved and automatically the bank deposited it in our bank account. So they have an entry, debit, cash in bank, and credit, ABC company. Since we do not make a deposit slip with that, we do not have that entry in our books. We do not record that entry in our books. That is why, say that is 1 million. They have 1 million plus, but in our record, we do not have 1 million because, as I have said, we do not prepare deposit slip for that. Another one is note collected by the bank. We let the bank collect a note receivable for us and they have collected it already. So, automatically, they deposited it in our account. That is why they have their entry, debit, debit cash, and credit, ABC company. But again, since we do not prepare an deposit slip for that, we do not have that entry in our records. So our records will not be the same. And to reconcile this reconciling item, that will be plus to book balance. Okay? Because the bank already have an entry plus cash, so we have to add also in our book balance. Okay? Number 2, debit memo. For debit memo, from the term debit, it means the bank deducted our cash because our entry, if we in our entry, if we deduct from the bank or the bank, their entry is debit, ABC company, and credit cash. That is every time they deducted from our cash. So debit memo means the bank deducted an amount from our account from them without the corresponding check. Okay, so it means that if they deducted cash from our account without the corresponding check, It means we do not have an entry. We do not have an entry on the credit side because we do not have a check for that. And what are the examples? We have the NSF check, the if, and the would check. And we have bank charges. Okay. So again, what is NSF check? That is no sufficient fund check. The if is drawn against insufficient fund, and the would is drawn against undeposited collection. Okay, for NSF check, example, we have a customer who pays us 150,000. The date of the check is August 31. So, say the date of the check is August 2025. So we deposited it in the bank and we prepare our entry, debit cash in bank 200,000 and credit accounts receivable 200,000. The bank accept it and prepare an entry, debit cash of 200,000 and credit ABC ABC Company 200,000. But the bank later bounced because the customer, our customer, doesn't have enough fund for that. So the check bounced and automatically the bank prepares an entry, debit ABC Company 150,000 and credit cash 150,000 to cancel the deposit. Since the bank have debit ABC of 150, we do not have the corresponding credit for that. Take note that all the debits here are reflected on the credits of the bank, and all the debits of the bank were reflected on the credits. All the debits of the bank are reflected on the credits of the bank. So again, the NSF check, the bank have debit ABC Company 150 and credit cash, while we have no entry for that 150 on the credit side. Okay. Also, the bank charges. What is this bank charges? Example, we order for a bank check, a checkbook from the bank, from the BDO, say 50 booklets of a check, and that cost us, say, 10,000. We do not prepare a check for that, and we just let the bank deduct it automatically from our bank, from our account, from them. So the bank, they have debit ABC Company 10,000 and credit cash 10,000, and we do not have that particular disbursement in our book because we do not issue a check for that. So again, our balance will not be the same. And to reconcile that, that is minus to book balance. Okay, and the third one is number 3. We have book error. For book error, that is plus or minus, either plus or minus. It depends on how our cash was affected. Example, we have this one, 15,000 payment for miscellaneous expenses. So we prepare an entry, debit miscellaneous expense and credit cash in bank 15,000, but erroneously we only record 1,500 instead of 15. We only record 1,500. So how much is the difference? That is 15,000 minus 1,500. That is 13,500. So again, as I have said, think first of what is our transaction, how the transaction affects our cash. It is a deduction, so it should be minus 15,000. But instead, because of an error, we only have minus 1,005. So how are we going to correct the mistake, the error? That will be minus 13,005. So to complete the 15,000, which means when we deducted 1,005, we have understatement of a deduction. So our entry, it will be credit cash in bank of 13,500. Okay? What if, say, 10,000, this one 10,000, and minus 10,000, but instead of writing 10,000, we write 100,000. So how are we going to reconcile? That will be, take note that the original transaction is minus 100,000. No, the original transaction is minus 10,000, but the erroneous transaction is minus 100,000. So we have a difference of 90,000. So how are we going to correct our error? We overstate our deduction. It means we have to add back the 90,000. So our entry will be debit cash in bank of 90,000. Okay, let us go to the bank's reconciling item. Okay, number 1 is outstanding checks. Number 2 is deposit in transit. And number 3 is bank error. Okay, outstanding check. To reconcile, that is minus 2 bank balance. Okay, this one is plus 2 bank balance. And again, this one, bank error, that is plus or minus. Okay, outstanding check. What is an outstanding check? It means that the book, the company, already recorded a disbursement, but the bank hasn't recorded it yet. So again, example, this 25,000, that is payment for utilities expense. The check were made at it was already delivered to Meralco. So we have our entry already, debit utilities expense and credit cash in bank. The check were already given to Meralco, but Meralco hasn't deposited it yet. So, BDO company has not yet paid, not yet deducted it from our account. So, we already have minus here, but the bank doesn't have record it yet. So, to reconcile, the bank should also deducted it. That is why it is minus to bank balance. What about the deposit in transit? That is the reverse of outstanding check. Example, this 200,000. This 200,000 were paid to us by our client August 31. So we deposited it to the bank accept it, but we have a clearing time, say, or we deposited it beyond the clearing time, that is, say, 2 o'clock in the afternoon. And it is beyond the clearing time. So the bank will record it as a deposit the following day, which is September 1. Okay? So, we have 200 here already recorded, which is included in this balance, 2,450,000, but the bank were not able to record it yet. So, they don't have the debit cash and credit ABC company yet. So, to reconcile, it is plus to bank balance. And we have bank error, plus or minus, the same. Think first of what is the original transaction and how the transaction affects our cash balance. Example, we have this 200,000. Instead of recording it as 200,000, the bank records it as 20,000. So, we have 180,000 difference. So, what is the original transaction? That is plus 200,000. It should be plus 200,000, but the bank only record it plus 20,000. So we have to increase it by 120, add 180,000 more to complete the 200,000. Okay, so let us have our illustrative problem. So we have our problem. The following data pertain to cash transactions and bank account of Jesusa Company for May of the current year. So we have cash balance per accounting record. We have cash balance per bank statement. Let us read the requirement. Prepare bank reconciliation and adjusting entries for Jesusa Company on May 31. Okay, so we have here the heading. We have Jesusa Company, bank reconciliation of May 2020. So we have bank and book. So we have cash balance per accounting record 1,719,000. So let us have an adjusted balance. That is per accounting record, so that is book 1,719,000. Okay. Then we have cash balance per bank statement. So that is per bank statement. So that means that is bank 3,195,000. Okay. Bank service charge 10,000. Bank service charge. So we have bank charges. Okay. Whose reconciling item is bank charges? Bank charges. That is debit memo minus to book balance. Okay. So, bank charges minus to book balance. So, here. And that is 10,000 minus. Then, next is bank memo, debit memo for the cost of printed checks delivered by the bank. The charge has not been recorded to the accounting record. That is 12,000. That is debit memo. Whose reconciling item is that? Again, that is also books reconciling item minus to book balance. So we have bank charges also. Bank charges for printed checks. That is 12,000. Again, that is minus to book. Okay. Then we have outstanding checks. Outstanding checks. Whose reconciling item is outstanding check? That is bank's reconciling item, outstanding checks. How are we going to reconcile? Minus to bank balance. And outstanding checks is 685,000. So, 685,000 minus to bank balance. Next, we have the 500,000. Deposit of May 30, not recorded by bank until June 1. So, what kind of reconciling item is that? That is deposit in transit. And whose reconciling item? That is bank's reconciling item plus to bank balance. So, we have deposit in transit. So, whose reconciling item is deposit in transit? That is bank's reconciling item plus to bank balance. And how much is our deposit in transit? Checks outstanding, debit memo, creditors check 30,000. Where is that now? Okay, on this one. So we have proceeds from customers. Okay, that is 570,000. So 570. 500,000. Okay. Then we have the 570. Proceeds of bank loan on May 30. Not recorded to the accounting record. Net of interest of 30,000. Proceeds of bank loan. So, whose reconciling item is that? That is credit memo. Proceeds of bank loan. So, how are we going to reconcile that? That is plus to book balance. So, we have proceeds of bank loan That is credit memo. How much is that? Proceeds of bank loan, that is 570. And that is plus to book balance. Next is, we have 570, proceeds from a customer's promissory note. Principal amount is 800,000 collected by the bank, not taken up in the book with interest, 810,000. So that is another credit memo, note collected by the bank. So again, it is plus to book balance. So we have note collected by the bank. That is 810,000 plus to book balance. Check number 1086 issued to Carol Trading Incorporated, a supplier, entered in the accounting record as 210,000 but deducted in the bank statement at an erroneous amount of 120,000. So first is, you have to determine who committed the error. In this situation, it is the bank error kasi because it says here that deducted in the bank statement at an erroneous amount of 120,000. So how much is the difference? That is 210 minus 120. That is 90,000. So think of the transactions, the effect of that in our bank, in our cash. The bank should have been minus, or the entry, the bank should have deducted 210,000 from our account, but instead they deducted only 120,000. So the 90,000 difference is, so we have here bank error. Okay, the 90,000 difference, what is that? That is understatement of a deduction. So we have 90,000 minus, okay, because they only deducted 120, they should have deducted 210. So we have minus 90,000. Then we have a check of Rose Pharmacy, a client, returned by the bank for lack of counter signature, 80,000. So whose error is this? Is it book or bank? It is book error because we deposited an 80,000. We already have plus 80 in our cash in bank, but the bank was not able to collect because that check was an erroneous check. Okay, so we have book error. That is 80,000. So minus. Okay. And we have the 77,000. Check of Joyful Merchandise client returned by the bank marked NSF, indicating that the customer's balance was not adequate to cover the check. No entry has been made in the accounting record to record the return check. That is 77,000. So again, that is an NSF check. Whose reconciling item is NSF check? Okay, that is a debit memo, NSF. That is books reconciling item. So how are we going to reconcile? That is minus to book balance. So we have minus of 77,000. Okay. So let us now have our balance. Let us get the balance. We have 3,195,000 minus 685 plus 500 minus 90. That is 2,920,000. And the book balance, we have 1,710,000 1,719,000 minus 10,000 minus 12,000 plus 570 plus 810 minus 80,000 minus 77,000. That is 1,910,000. Ay 2,920,000. Okay, that is 2,920,000. So it is balanced. So let us have double rule. Okay, let us now prepare our adjusting entries. We're going to prepare adjusting entries for books reconciling item only. So we have 1, 2, 3, 4, 5, 6. So we have 6 adjusting entry. But take note, this 2, 1, the first 2 reconciling item, both are bank charges. So we can prepare 1 entry only for this one. If it is negative, it means we have to deduct from our bank balance. So our cash in bank should be on the credit side. If it is positive, 570, this one, it means we add. So in our entry, cash in bank should be on the debit side. Okay? So this one, 10,000 and 12,000, it is credit. It is minus. So it should be, cash in bank should be on the credit side. And what are this 10,000 and 12,000? That is both bank charges. So we can use the account title bank charges. So we have, the date of this adjusting entries is all May 30. So we have May 30, 2019. So we have bank charges. I think May, June, July. I think it should be 31. So we have bank charges of 22,000 and credit cash in bank of 22,000. Then we have the 570. What is this 570? 570. That is proceeds of bank loan. So, net of interest of 30,000. If we said net of interest, it means the 30,000 were already deducted from the 570. So, our entry, debit cash in bank of whatever is the amount, 570. Then, another debit, the 30,000. Interest expense of 30,000. And credit, notes payable or bank loan payable of 600,000. Then we have the next one, 810,000. That 810 is a note collected from our customer. So, debit cash in bank, 810,000. Then, collected by the bank na taken up. The principal amount is 800,000. So, credit, notes receivable, 800,000. And what is the 10,000 difference? That is interest income. Okay. Then we have 810, this 80,000. Book error. A check of Rose Pharmacy, a client, and also this one. Okay. Take note that for this, both 80,000 and 77,000, that check are both comes from our customer. And When we receive this 80 and 77, we prepare an entry, debit cash in bank and credit accounts receivable. But the question is, are our customers really paid up already? It is not, they are not yet paid because their checks bounce. So, we should not have an entry, debit, accounts receivable, and credit cash. I mean, debit cash and credit accounts receivable because we do not really receive payment from them. So, we have to cancel that account. And to cancel that, we have our entry, debit accounts receivable and credit cash. That is 77,000 plus 80,000. 157,157. Okay. So, again, for this two, we prepare this entry, debit accounts receivable, credit cash, to cancel our original entry, which is debit cash and credit accounts receivable, when these two customers pays us. Okay. So, with this entry, we just corrected our account, cash. Say this is the T account or the ledger of cash, our cash item, our cash account. We have cash in bank. So we have our ledger, cash in bank. Let us post our entries. So the unadjusted balance is 1,719,000. 1,719,000. Okay. And we have our first entry, credit cash in bank, that is 22,000. Then we have our second entry, debit cash in bank, 570,000. And we have our third one, debit, 810. And credit, 157,000. Okay. So, to get the balance, that is 1,719 plus 570 plus 810, that is 3,099. And 22,000 plus 157, 179,000. So the balance is 2,920,000. Okay. So we have our adjusted balance of 2,930,000. Okay.